Hear that sound, I just imagine producer Ryan just rocking out as we start the Community Rip Live right here. It's 1 o'clock on Wednesday. Hi, it's Bags or Ben, or I've been called worse, so whatever you want to call me. Jfdi, Nick, hi Nick, and Gpaisa, Gautam, my two best friends. Hey guys. We got some selling going on today. Nick, are we still bullish enough?
Hold on a second. I'm trying to. Can you hear me?
Yeah, I can hear you just fine.
Oh, all right. Yeah. I don't think so. I mean, my tune hasn't changed. I think. Again, I mean, it kind of what we were talking about pre-show. It definitely continues to be a stock pickers market, and there's some weakness showing up in the mag names. So I think that's putting pressure on the Qs, obviously. IWM definitely holding up incredibly well, and then we saw crypto rip. So it's kind of, yeah, you know, I think those that are probably overweight the mag are probably feeling it the most. Although there are other names in the NAS too that aren't really trading the best or performing the best. I don't know if, yeah, I'd like to see us close up off the lows today. And I'd like to see this kind of remain contained tomorrow and then push higher Friday. I think if we start to see a little bit more weakness hit the Qs, I would be looking to see that January 2nd low kind of get taken out, and then using that kind of pivot low as a kind of shakeout, and want to see that price kind of get reclaimed. I'm not super exposed to the mag names other than Tesla and Nvidia, so like I'm not really feeling it too bad, although my P&L is kind of starting to churn a little bit today. So I don't know. I still don't think we're bullish enough. I think it's a big year. I just think that, you know, some of our, I think, again, like we said pre-show, like the frustration is coming from trying to impose our will on the market, wanting it to break out when we want it to break out. And when we don't get it, it can be, you know, obviously frustrating. You know, just looking at the Qs, it definitely like is so pretty. It's like, is it too good to be true? Obviously, time will tell. We're still sitting. I really don't want to see us get much weaker today. I'd like to see the trend line hold here and the 50-day kind of the 50-day and the trend line kind of hold here. I think even maybe like a test of like kind of the 612 would probably look kind of good. I think we would need to take out 600 for me to kind of really shift gears. Even if we touch the 600, I imagine. Yeah, I would imagine that a lot of trail stops will get hit if we, if the 610, 612 gets taken out. I would anticipate a lot of my trail stops getting hit on individual positions. Just
GP, are you clutching pearls already?
No, we've been talking about, like, my gripe with the market is it's affecting the stocks that I own, because I don't own a lot of mega caps. We talked about this ad nauseum in terms of mega caps are not going to be where I'm going to be. Real world economy stocks. Look at what Exxon is doing. Look at what a lot of the real world stocks are doing. And I'll have short-term positions in mega caps as they set up here, bounce and stuff like that. But I'll use that to generate cash to add to my other positions, right? So
Exxon all-time high, breaking out of that, what we see is a, what is that, about a 4-year base, 3-year base?
Yeah, just I'm not doing anything but just holding it, right? I got it around a 4.5 or 5% dividend, and it's breaking out. So you got the power couple here of dividend plus base breakout, right? So let it play. This is not a stock that I assume is going to get any alpha, but it will continue to churn up and down for a while it grinds higher. So I'm good with that, right? Like, so, and then some of the other names that we talked about in terms of crypto, like coin is acting pretty strong here. Silver has been a beast for me, which I think we're getting closer to the end than the beginning of silver's move. So I wouldn't be chasing a lot here, but yeah, outside of Tesla being a miserable cow, like everything kind of looks good. I really like AMD here, right? AMD looks pretty good. It's getting the love that the chips are not ultimately. And so I'm positioned for AMD. It's one of those like chip mega cap names to take advantage of the short-term moves here, but I'm not going to overstay my welcome in any of these as a trade, right? Or as anything else. But just because I say I'm not a mega caps doesn't mean they can't be green. It's just talking about performance, right? And you can see it hand over fist today with small caps continuing to push green while mega caps can't find a buyer, right?
Yeah.
Or sorry, the tech can't find a buyer. And so Nick, what you were saying is if you go do me a favor, Bags, bring up the NQs.
Sure.
And go to the daily chart starting from like mid-October. So to me, I want this candle to close at the very freaking lows, right? Like I want it to be beat down so badly that everyone's like, I'm going to short the whole, right? And so they have now done that. What is it, 7 candles out of the last 4 months? October 10th, November 21st, December 17th, which also happens to be Wednesday of OPEX, during a major OPEX. Just saying. So like I'm not bearish the markets, but what we talked about for the last couple of weeks is until tech finds footing, the rest of the market is going to struggle to push out because the weighting of those 7 to 10 stocks is so high, and for how many names that have to counterbalance the moves there,
yeah,
it's going to suck, right? So the fact that Broadcom is down 5%, the fact that Amazon can't find the breakout for whatever reason, Apple is struggling balls, Nvidia is just churning sideways, Meta and Microsoft have been under the 200 SMA for months now, right? Like it's not a shocker that they're selling off here. That's the expected result when you're under the 200 SMA. But if these start to find a footing, so to speak, then the names that we have been talking about start to get inherently better, right? Like look at Rocket Labs. Rocket Labs is doing perfectly fine today, right? It's having a good day. So
let me ask you this, GP. Let me ask you this.
Yep.
Wouldn't this, if crypto's doing well, if small caps are doing well, wouldn't that indicate it's a risk-on environment?
And biotech, look at XPI today. It's like high day all day.
Just throw another log on my fire, baby.
I agree with risk on, but risk on has to be, to me, has to be balanced with the risk off in the tech stuff, right? It's got to turn to stop being risk off to finding bottoms and rotating some money back there. But if this continues to be, I'm going to sell tech to generate cash so I can go buy small caps, it's going to struggle for a while until that selling is done. That's all I'm saying.
Zaw just posted it in chat exactly what I was getting ready to say. The data center bills are going to start coming due and hitting the bottom line. And that's what we've heard from the administration, right, with the Microsoft deal, that these data centers are going to have to pay for their own electric and water, right? They're not going to be able to throw that off on the consumer like they have been doing over the last year and a half. And I think that's a lot of the scare. And it comes back to exactly what we've been saying. And GP, you coined the term over and over and over. How can we divorce you from your shares? There's nothing wrong with what's going on. It's, oh my God, Meta and Amazon and Google and Microsoft are going to have to pay a fraction of their bottom line for more electricity and more water, right? And that, I think, has the fundamental reason why all of these sellers are in mega caps right now. We look at the QQQ, and we talked about this yesterday on the show. Like we thought there was a breakout, right, Nick? And by all intents and purposes, there were. But GB, you've said this over and over again, is we just can't get follow through. And this is another example of follow through. Does this mean we're going to get follow through to the downside? It's yet to be seen. I think people would be losing their mind, right, if we came back into 500 something, 590, 580 down here, like you were saying, Nick, or GP on the NQs, right, with 2,400 or 20. Was that right? Was that the number that you were looking at on the NQ? Yeah, like 24,000. I think people would be losing their mind. But in the grand scheme of things, that's 5%. And from where we were at, hey, that's a 7.5% sell-off. Kind of run of the mill type shit. So, like, when we came on, I wasn't, I'm in a good mood because of personal things. But at the same time, like, this isn't, I'm not a day trader. I'm not a short time frame swing trader. I'm just looking at it like I'm still glad I got some cash. So I know not everybody's that way. I know everybody has their own time frames, but I think this is all going to just sort of wash out. Nick, is that kind of how you're looking at it too?
Yeah, I am. And kind of where price is sitting on the Qs. Yeah, absolutely. I think I shared a chart of the MBIS chart earlier today. Somebody had asked me to explain it, and I was kind of just giving my take on high volume lows, high volume candles. HVC.
Which one was it?
Well, you can keep it on the Qs for right now, just because I was just going to point something out. And kind of what I had mentioned was that the highs and lows of high volume candles love to be tested. And it's not always as simple as like a tap and go, like price coming down to that high volume candle, like the high, and then we might get a bounce there, but we might need to retest it a few times before we do kind of ultimately like break higher. Or if that high volume candle high doesn't hold, it's likely we're going to retest the low of that candle. So when you're looking at the Qs, and again, we're technically still in a range. Price right now is basically sitting at the high of 2, if not 3 different high volume candles. That's those massive sell-off bars. The 1010 candle, the November 20th, the 1120 candle, and then even, well, I suppose that one might not count, but the December 17th and December 18th candle kind of conjunction. We're basically sitting right there. So I guess that's just kind of what I was pointing out in the MBIS chart. It was kind of the same idea. It's like, we're sitting kind of right here. I'm anticipating us kind of holding. Like I don't really want to see us get much. I know GP wants to see us close on the lows, great, but I want to see us hold basically kind of where we're at right now.
I mean, most of us are position long, right?
Totally.
we the three of us sometimes buy puts or play short every once in a while, but for the majority, we're long traders, right? We get long, and when you have a sell off and your portfolio gets a hit, right? Like you don't like that, obviously, but at the end of the day, you want a nice P&L day to day, week to week, month to month. But this is just part of getting more green in your portfolio, is taking these digestion selling, GP, or do you think it's more than digestion?
So I would say there are some concerns, right? For me in the small cap world as well. Like I'm a holder of Rivian and Unity software, and last few days, if you pull them up, we're retesting the base and kind of holding. So I'm still on a weekly basis with these, right? So as long as they close above that 1890 level for Rivian, I'm confident that it's just a base retest, but it's not behaving well. And Unity, the same thing, right? Like you have this, it's the red flags are obviously intact for the most part, but there's some key names that I believed in and that I have positions in, obviously, that that brought some concern to me because small caps have been strong. So why are these small caps or these smaller names getting bamboozled today? And I know Rivian's on a downgrade or whatever it is, and honestly, there's just no bid in this market. So I think they're pushing down. So I want to see how it closes for the week. So there are some concerns for me on that perspective. I'm in China, right? I'm in Baba specifically. That has been doing pretty well. So I'm not complaining or whinging or doing all this stuff because it's more of where things stand, right? Because if there's pressure, right now it's Microsoft and Meta that are under the 200 SMA, but Apple's 200 SMA is at 233, right? That's still another 10% down from here, right? If things want to get a little hairy and freaky. Obviously, Amazon's 200 SMA is much lower, but Broadcom's is at 296 now, right? So you still have another 10% down from there. Nvidia has been churning sideways. So but the pressure of these names, right? The guys who have basically said AI is the future, if they start selling, it automatically just causes a mental psyche of fear, right, in the general market. So that does not help the markets find stability. And if they continue to sell, all of these other names will start to participate to the downside. It's not gonna just all of a sudden start to behave stronger. It's trying to today, right? You can see the strength, but all these buyers right now in these stronger names automatically become sellers if these things start finding more sellers. And then you have sustained movement to the downside because not only do you have the original sellers, you have these additional new buyers that add push to the downside. So
yeah, selling begets selling, just like buying begets buying, right? Like when the move happens, everybody piles in that direction.
And so, like, if you're talking about red flags, the other green flag to me is copper, right? So copper and Dow theory confirmed last week, right? They both were breaking out. And so copper is sitting here and it's right at all-time highs, right? And so if copper is an indication of the economy, it tells you that a little bit more fuckery can happen, but ultimately we're going higher, right? Does that chart look bearish to you on copper? No, right? It's breaking out. It looks almost the same as ExxonMobil, right? Or a lot of these big bases at all-time
I would say it looks really similar to Exxon.
Yeah.
Yeah.
So to me, this is your green flag to say the thesis that we talked about, or I talked about, if you guys don't want to take ownership of that, but the thesis I talked about is real world stocks, right? And real world stocks are showing you that they're still alive and healthy. Can this fail by the end of the week? Absolutely, right? Silver continues to be strong as well. I don't see the same. I think that's a short squeeze play more than anything else right now, and not a fundamental anything. So you can see that gold is not behaving in the same alpha as silver because it's not in the same squeeze. That squeeze already happened into Stocktoberfest. Right. And now it's been healthy and churning and not having 5-10% moves every day or every other day and stuff like that. So, but yeah, I see it. It's nice to see crypto start to participate. Crypto was the first to kind of move out in April, and it seems like the last to move out here. So that's an interesting swap for the most part. Yeah, like
or it could be first to move up. All right, it could be first to move up because everything else might be coming down.
Yeah, I'm over the pair trading, please. Thanks. We can just all go together, right? But no,
what fun is that? What would we have to talk about every week?
we don't get that, Ben, until money comes off the sidelines, and the people who are sitting in 3-4% interest-bearing accounts, money market accounts, those guys come in. Then we see more participation. In the meantime, it's a pool of money that's rotating between, which is why the pair trading is even more. This is my thesis, right? Which is why the pair trading is even more prevalent.
Nick, do you think people are going to bring money off the sideline? Ever since I've started investing, I've heard there's so much money on the sideline. There's so much money on the sideline. I think money's on the sideline because money's on the fucking sideline.
Yeah, I don't know. It's such a tough. I don't know. It's such a tough statement to argue. I think for the active, like those that are active market participants, and I guess when I say active, I even mean kind of like the part-time, like passive investor that sort of has interest, not really, but when things are hot, they definitely like to step in. I would imagine something like that happens when we do see some follow through and price takes out highs and momentum starts to come back into the market. Both momentum and direction, comes back into the market. I don't know. It's just it's a tough statement for me to like argue because I agree with you. I think for those that have been scared out of the market for whatever the reason may be, they're never
They stay scared.
They're never coming back.
Bullshit.
It's one thing after another. I mean, like just in my trading career, from 2008 on, it's been one thing after another that has been perpetual fear mongering. One thing looming after another. And if you are stuck in a fear state and, somewhat of a pessimist, like I just don't see unless you go through some radical life change or have an epiphanic moment where you're like, oh holy shit,
It's hard to break the cycle.
it's hard to break. So I just
it's the miserable bear theory, right? Like it's just once you get to that place mentally, it's very difficult to get out of it. It's not impossible, but it's very challenging. And I think a lot of the money on the sideline, GP, you can go ahead and disagree with me after this. I think a lot of the money on the sideline is dead people. I think there's a lot of accounts that are just sitting there flush with cash and they don't ever get invested. I remember months ago, I think it might have been in actually 2022 when we were talking about this money on the sideline statement. And I pulled up some report, I think it was from Schwab, that the best performing people were the holders, right? And the holders were dead. They had the best P&L of everybody because they weren't doing anything. They were just holding the money. So I think a lot of the money on the sideline is people who are not interested in trading because they're scared or what have you, or they just don't have the keys because either they passed on or the money's just there and it's not something they're doing. They can buy real world assets if they choose to, GP.
I think investing in general is kind of again, like speaking as a millennial, if you lived through 99 and 2008, just two things that really stick out, and then see how the market has moved, particularly since 08 and then, breaking out in 2013, I feel like even more so you see the how far we've moved and how far we've come. You feel like it's too late as well. So it's like, and then you layer that with technical analysis. Like if you don't have a very basic understanding of like technical analysis and trend, you're flying blind. So you're throwing money out there with and like what kind of timing you don't know if you're buying the top, you're buying the low. Like I don't know. That's just kind of how I think about it, I guess.
GP, are they dead people?
So I don't know about any of that stuff. All I know is I've been talking to friends and stuff who are like, shy to put money to work, right? They're getting their 3.5% or 4% in their banks, and they're like, yeah, this is a better thought process, right? So when I talk about money on the sidelines, I'm not talking about some report that I'm talking about actual real world conversations with people on like I've had a lot of conversations over the last couple of weeks around people who are either selling covered calls or, should I buy this? Or they're looking at buying Meta, or they're looking at buying Adobe, or they're looking at stuff that they consider value plays.
Yep.
And so people are seeing that their returns in their money market account at 3.5% plus taxes on federal and state levels, depending on where you are, can be up to 50%, right? So you're only getting 1.75. So your money's not actually working that well for you. So people are looking to put money in the market, but they don't want to put stuff in like ONDS or JOBY. They're putting in stuff that's been trashed for ages. Like I've had people talk to me about Nike, about Adobe, about Meta, all these names. And I'm like, and so they're trying to put money to work. They just want to find value. And so if we start it, like this whole JPOW nonsense stuff that's going on in the world right now, the reality is he was and has always been late, but because the economy has been pretty solid overall, he's been saved by his ineptitude but he has navigated some crazy times. But I'll give you the best example of Jay Powell. He cut rates in March of 2022, literally the peak of inflation. Right.
And we said the whole way that you're too late to the party. Like we always say, they're too late to the party.
So like, I wish this just ends, right? Like if they bring down interest rates, which they should for the real economy, the real world economy, one area where I absolutely agree with Trump is like, you're hurting our small businesses, our ability to grow, because you're worried about inflation when uptick from 2.6 to 2.7%. Like, my eggs are still 100% higher than they were a year ago. So what are we worried about here, right? Let it run a bit hot, let it work, fix itself out. Either you got to get fiscally responsive or you got to grow your way out. There's only two options to fixing some of this stuff. In my opinion, I know you can get into more details and stuff around that stuff, so I'm not arguing that. But you cut rates, and right now it's at 3.5%. But if that drops to under 3%, that money on the sideline, so to speak, the people who are worried are like, shit, now I'm not even tracking inflation. And people think about these things, right, overall. And so like, okay, well, where do I put money? It might be in small businesses. It might be in stocks. It might be in whatever it is. But that money comes off the sidelines is my whole point. Wherever it's going, whether it's into the economy or into equities, it's good for us overall. It's better than sitting in a money market account generating 3% on a right? Like Buffett holding $400 billion cash is terrible. That's $400 billion that's not in the economy, right?
Exactly.
So a bit based on his concerns and all that stuff. So that's all I'm saying.
Yeah. I just did a quick search on money on the sidelines, and then I threw that into ChatGPT. And you want to hear what ChatGPT gave me after my Google search?
Only if you balance it with Claude.
Sure. How about Gemini 2?
That works.
Do we have time for that on this show?
I think we do.
Oh, why does it do that?
Oh, we lost Ben?
Yeah, we did. Did he really click out of here or something?
It's possible. Anyway,
ChatGPT didn't like that.
Ben's back.
ChatGPT didn't like me cheating on it with Claude there, GP. Thanks. Totally kicked me out. Anyway, so money on the sidelines. Yes, GP, you're right. a lot of the money is in money market fund, treasury bills, bank deposit, corporate cash balances, pension endowment buckets, and risk parity. So that's why large pools of money are mandated. It's just not risk on investments. But there is also a portion of funds that are people who are unwilling to buy. This money never gets invested. There is an inordinate amount of money that belongs to dead people. And the other thing is it also goes into real world assets. Now, I didn't tell ChatGPT I think it belongs to dead people. That's not how I queried this. But it says to think of it as money doesn't disappear. It transfers from one seller to another. So as opposed to thinking, when will money come off the sidelines or there's money on the sidelines, think of it as what conditions would cause current cash holders to accept more equity risk. And I think that's a good way to put it, because we're all hearing analysts and these institutions saying all the time, well, there's X number of billion or trillion on the sideline. Well, there's always going to be that much on the sideline, right? Because if I buy a stock, somebody sold me a stock, and unless they go immediately and invest that, that's cash on their books, basically. So anyway, there you go. There's the AI version of our little back and forth in regards to money on the sideline.
And that tracks to what we were saying, right?
Exactly.
Common sense logic, right?
Hey, we're smart guys for a reason, right? You know, at least two of us are. I won't say which
you might
two.
be. I'm not.
I was going to give myself credit. I was going to say Ryan's the smart one because he let me back in real quickly. Nick, I was asking GP just a second ago about his P&L, and I've had a long battle of just sort of ignoring the P&L on a day-to-day basis. How do you deal with peeking at your P&L or seeing how things are performing and not do any, gut reactions or knee-jerk actions because something's happening?
I do my best not to trade it. On an individual trade basis, I pay more attention to the percent gain or loss versus the dollar gain or loss. For a long time, I had to completely remove it from my screen, especially as I was trying to transition from a day trader to a swing and position trader. It's been, as I've gotten older, it's become a lot easier. I don't really on a grander scale, I don't pay too much attention to it as long as my overall equity curve is kind of up and to the right. But on an individual basis, yeah, I pay more attention to the percent. Even like on my position manager, I don't even have the dollar amount P&L on my screen. I do have the percent and like the dollar in terms of points, but not in like the dollar amount. It just has a way of kind of fucking with my head, and I typically make poor decisions when I do trade my P&L.
I just skip right through that screen. It's like as soon as I open up my Schwab account on my phone, I'm just like, I just want to go see my positions. I don't want to see this big number that is going to fuck with my head.
Yeah, I recently, I shouldn't say it too recently, but within the last 6 months, I started kind of this is gonna sound weird, but I'm gonna talk about like my wife and I. Like I started kind of picking apart our attachment styles, right? And as I've looked into kind of like anxious attachment versus like avoidant attachment styles, I've recognized that I have a much more of an anxious attachment style. So when I notice myself, especially when I'm not at my desk, that's where it kind of comes out, especially with like the way phones are now and our iPhones. If I'm like having to continually pull up my broker and check every fucking tick, like I know that there's something going on inside of me and I got to back the fuck off. Either like it could be something as I'm too big in a position, which is typically the case, because that's, the bigger size I have on a position, the more vested interest I have in that position working out, right?
Naturally.
And so, yeah, I noticed that like it's just something. It's a new thing to me where I'm like, oh, holy shit, like maybe I just need to kind of peel off a little bit. I do a pretty good job in my trend account. Most of my positions remain relatively same size, so like that's pretty easy for me to kind of just set it and forget it and allow those to work. But in my concentrated account, it's like where I'm only in like let's say 4 to 8 positions, it's completely different. Um, and as I've kind of like picked that apart, I don't know, I'm kind of like learning some new things about myself that I think are is going to help me in the long run.
Know thyself, right?
Know
I
thyself, yeah.
mean, the one account, the trend account, right? You have, I don't know, 10, 20 bullets, right? Like you can do that X number of times, right? The other account has to be more selective because this is more concentrated risk as opposed to spreading it out.
Right. I don't want to be like in that account. I don't want to be in dead money. I don't want to be in stage one. I don't want to be in like, long consolidation periods where even price is kind of really below I mean, big picture, I don't want to be anything where price is below the 50-day, but I really want price respecting the 10 and the 20 in that account. So I don't know. It was just kind of it was kind of like a look in the mirror kind of moment, and was like, oh, holy shit. Now I see how that's kind of showing up in my trading. Way back to that day, the day that you two were gone, and I had Kim Curtin on the show. It was an interesting day. She talks a lot about, the hero's journey and kind of what we go through as traders and investors. And what she really preaches is this idea of having and being aware of your core needs as an individual. And the better understanding you have of that, the more you're going to get those needs met outside of the market. And if you aren't getting those needs met, you're gonna find a way to get those needs met in the way and the decisions that you make in front of your screens trading. So, for instance, when I met with her, I realized that like adventure is kind of a core need for me, whether it be out hiking, biking, doing outdoorsy stuff. And if I'm not getting that met outside of the market, dude, I will come into the market like guns blazing, like just gunslinging. Like I'll take a gazillion positions just to like because it feels adventurous and it feels productive and it fills that when that's not it's not a profitable strategy.
Yeah, but that's interesting that you discovered that and found that. We got one question in the chat. Our chat's been kind of quiet from Viper in this tech and software sell-off. What software name would you bottom fish on right now? And you guys know where I went. I went with ServiceNow. I bought some yesterday. I'll probably buy some more at some point today. GP said Snow.
I'd go with
Nick,
MDB probably.
Which one?
MDB.
MongoDB.
Yeah, I was being sarcastic with Snow.
He was not being serious.
IGV looks terrible.
Yeah, it went from looking like some real potential to
the question wasn't how bad does IGV look. The question was if you were to bottom fish, which name would you?
I wouldn't bottom fish because IGV looks like shit. That's the point.
Okay, Mr. Sourpuss.
I'm just saying, look at that. Like it at the very least, what we need to see from IGV is test the bottom of that wick, right?
Yep.
And hold. If that happens, then I could say it looks better, right? Right now, it looks like it's about to fall off the cliff.
So since we're rhetorical, let's say it does that. Exactly what you said. Which would be the name that you would look at first?
MDB. Hands down. Yeah.
I think Cloudflare would be my second. I think the potential for the double bottom here is there.
Cloud's actually not flat net. Cloudflare is only down not even a quarter of a point. So in a massive sell-off, it's actually holding better than others. Let's look at a couple other names. We got Datadog. Looks like it's dying. Let's go to some cyber. CrowdStrike down 2.5% almost. Any other names you guys interested in? What is
I'm
the chat
looking
say?
at the sector right now.
Zoff says DBD. D-Bolt.
Did you know that MicroStrategy is in the software sector?
It makes sense because it was in the software sector. It's sold off today.
Yep.
Yeah, it was up to 190 nearly. Yeah, it was up to not 190.20. Now it's trading near the lows of the day. Still a gap up, but that's not the action that you want to see, correct?
Correct. I would look at Riot, which was also in the software sector, surprisingly.
What name?
Riot. R-I-O.
RP wants to know, can we elaborate more on MongoDB? Who wants to take that?
Go ahead, Nick.
What was the question?
Well, both of you chose MongoDB as which one
so,
of the software sector you like. He wants you to elaborate on why.
If you zoom out to the weekly, we've got a range from about 150 up to 500. I love the look of it. It definitely is it's a wide range. The way that I'm looking at it is that early 2020 would be kind of my starting point. So that'd be my 1. I'd have a 2 kind of up late December 2021. Third kind of wave or touch would be January of 2023. I'm sorry, December/January 2023. My 4th would be obviously the high up there, February 2024, and then 5th would be this most recent low in 2025. And then even within that, we had a descending channel that you can kind of see built out from basically end of 2023 to mid 2025. We broke out of that. Price kind of moved sideways from July through almost kind of the end of the year. We broke higher. I think right now it's sitting right on the 10-week, which if this could remain contained, we have the potential to put in a 3-week tight here on the 10-week line. So relative strength, speaking in terms of relative strength, I think this looks phenomenal compared to the IGV. And what I think ultimately what I would be looking at and trying to do is kind of build a position and with some cushion prior to that 500 getting taken out. Because I think once that 500 gets taken out, like, you're talking about a run to 1,000, or at least at the very, let's see. So actually, let me take that back. Range is from 150 to 500. So we've got a 350 point range. So I would be looking at price to bolt to basically 850. Once we take out that 500, 550 area, which in terms of points, that's a big run. And as we've kind of spoken to before, expensive likes to stay expensive. So that being said, it's still within a range. So it'd be tough to really expect that breakout or expect follow through. It's just you're trying to find and nitpick your price and let higher lows kind of prove you right. So you're not looking to get incredibly big. You're just looking to kind of build and allow it to work itself out. And then obviously if price fails, breaks down, you kind of keep that small limited. The longer term moving averages are also curled up, the 30 and the 40 week, which are obviously kind of a little far off from here. Although the 30 week has caught up to that most recent base that it broke out of, or that most recent kind of like flag from like 300 to like 350. There was kind of like a range right there. Yeah.
Yep.
So let me pull it up on my desktop quick.
Anyway, not the most exciting chart, but it's easy levels to shoot against, as I like to say, right? Like
Yeah.
you have this area, then you have this area,
Yep.
and if they break, then obviously it's
Then you-
foobarred, right?
At that point, it's like, let's say MGB is this name that you have, you know, it's expensive. You have some other, like, I don't know, you have conviction in this name for whatever reason. You know, it might be one that you do try to bottom tick then versus kind of like either, let's say, the 200-day or, you know, 200-day gets taken out. You're like, well, shit, just let price kind of revert back to the low end of the range, and maybe you can bottom fish it versus like 150, 160. And then your RR is like really skewed, pending it, you know, it holds there.
Dawkins is holding up pretty well there, Nick.
Yep.
GP mentioned that as a name. And shout out to Za for putting the top 10 names of the IGV. I'm not going to go through them all, but the top 10 names are basically 61.5% of the entire sector there. So you got some big names weighing everything down, right, GP? I think that was your goodness gracious great balls of fire.
It is. So, but Docken, take a look at it, right? It's a weekly base that it's breaking out from, but more importantly, you have the weekly golden cross happening, the 50 to the 200, and we have typically that's a buyable zone. Like you want to see if you get weakness into that zone, it's even more buyable. But this is, to me, this is setting up above the base with a cross. You have multiple factors here that you can have a pretty sizable move out of here. Yeah. If you look at Celsius, right, holding CELH. This is why I say the weakness into the golden cross on the weeklies is a much better positioning, and you had that massive move down, and essentially it's done nothing since because it's got the golden cross underneath. So Docken is in a very similar boat that actually I probably will establish a position today. Start a
nice.
Position. As I was looking through the software names, I was like, that's the one that, because the risk is pretty easy on that one, in my opinion. Like you don't have to put a lot on to risk if it fails, right? If it fails, you can basically just use
$50.
Not even, right? Like you don't, like, just use last week's low is what I would use, right? To keep the risk tight. Oh, that is 50, 66, same thing. Yeah. So you got about 6% risk down, right? So you can either do it in 3 batches, right? If you're going to add, let's say 300 shares, 100 now, and then you can add when it gets to 48-ish, I think. Or sorry, at that point you would just get to the 50 SMA, which is 47.68, and then I would look to buy around 42.
Yeah, I like these types of setups because they define risk really well. And I've got you're in your stage 1 going stage 2, right, Nick?
Yeah.
And I think the challenge that you get yourself into is if you let it get back into the base, unless it happens quickly and is an undercut and go, if it gets back into the base, it falls further into the base. So I would probably, I usually give my stops a little bit more room, just in case something like that were to happen. So I would probably play it down to the weekly 9 there at like 48.80, something like that. But yeah, I like it at 50 for sure. I like it at 50. And if it goes below 50, then under that weekly 9, and you need to see it, you turn back out of there. Play the Uno reverse.
Yeah. Yeah, Docken. I think it's gorgeous. I think you have a 3-week tight, basically in alignment with the 10, or basically the 9 there at 48. I think if I was going to put together a tranche trade on weakness, I'd probably be looking to buy, like you said, kind of buy 100 shares at 48, probably another 100 shares at like 44, 45. And then I'd probably have my stop like about 41, 42 if I was playing it, that aggressively. I already have a position, so I'm not too concerned about it. But
what is that midline there? That's basically 42.50 right there.
Yeah.
Well, I just started a position as we're talking. So,
nice, GP. We had some action in a portfolio while we're on the pod. Hey, GP. RP, sorry, GP. RP asked GP. He said there's 2 gaps on MongoDB here, and gives him pause. The volume is super, super low. So maybe it moves on ER. I mean, yeah, you've got those gaps. I'm not a believer in every gap fills. I've never been that way. But I think once they get into the gaps, then that's where the risk is. Nick, is that the way you see it too? Or
yeah, for sure. I think that I'd have to reflect on that a little bit. I think when I think about gaps, I generally think the gaps to the upside act as magnets to be filled versus to the downside. Only in the event in conjunction with the overall market trend. So like if the indices were in a downtrend, then I would be in the camp that these unfilled gaps might act as magnets or as, I don't know, maybe an area of support or whatever you want to call it. But being that we're in an uptrend, I wouldn't be too. I wouldn't be looking at it like that.
GP,
Like,
I pull up AMD because it's flirted with its gap that it had back in October. 1, 2, 3, 4, 5, at least 5 times. I think you're muted, GP.
Oh yeah.
This is very similar to the Q setup. This is each push down into this zone is getting shallower, right? So, and that we talked about AMD on yesterday's show, right? Not only did it have a shallower pullback, it also went and put in a bullish engulfer, and then it confirmed, right? Technicals are confirming overall. So if you take a look at this versus the Qs, take a look at the Qs as well. You can see these massive red candles showing up in the same zone, but each time the red candle is slightly better than it's not better. It's not great at all, but it's slightly better in terms of the velocity, right? In terms of that 10-10 candle, I believe everyone remembered because it also wiped out a shit ton of crypto folks. That was a miserable candle. And then you're like, oh, we can't have that again. We have it again on 11/21, right? It's the same thing, but it's slightly less miserable, right? It's like, dude, I went into the doctor's that day. I had a doctor's appointment for the first time in a year. Some Fed speaker comes out, and I'm down like a shit ton of fucking money, and I'm like, this is what happens when you want to stay healthy. Anyway, that's neither here nor there, but. All I'm saying is these cells in this zone are petering, not accelerating. So something to keep in mind. Now we've seen that. Let's see follow through. That's the thing that we've been missing, right? So AMD had the bullish engulfing. Let's get the Qs to resolve tomorrow. I don't think it happens today. That would be
It's not happening today. Yeah. No, that's not happening today.
And things can get wild, man. Things can get wild. It's OpEx, right? Ultimately. So, but yeah, it's what you want to see, like these. Anyway, go ahead.
Excuse me. I love January OpEx because all those leaps that everybody's been holding for God knows how long. If you didn't cash them in, they're probably expiring worthless, right?
No, look at SanDisk.
I said most. There's always going to be an exception to the rule.
Micron, SanDisk, all those names, bananas, right?
You know, it's a great way if you're holding leaps to just sort of let the old year roll out. Right, we've got till February when the Lunar New Year starts, so just let that be the last foray of the old year. Let those old leaps just sort of go away.
And that was the thing. Do you remember 2023? We're like, oh my god, this is not this again. January UpX expired, and then off to the damn races.
Release the hounds. That's what I'm getting at. Exactly. Exactly.
Yep.
Here is 23 right here. OpEx and woo.
Yeah. Do you remember how many people were bearish into that OpEx?
Everyone and their brother.
People are like, now they're like, oh, price targets of 7,700. Like, fuck off. We were calling this in 2023.
I remember that show. Actually, I think it was a little bit later. I think it was in March, I think, that we were all kind of sitting there going, what the fuck? Like, we literally broke the descending trend line. The 200-day was flatlining. Price was moving sideways and higher lows were getting put in. Like, how are you not getting involved? I remember that whole time period. Really, like, we were uber fucking bold.
Yeah. And to be fair, I thought we were going to break away gap, and we broke down instead today, right?
Yeah,
so
we've made some good calls in our time that we've done this little fun adventure that we do on our YouTube and we do here on Stocktwits. We've made some good calls. It's been fun. We are running out of time though. We got 2 minutes. Nick, let's start with you today. What's your last word?
We're still, I know, here in the West, we've all kind of gone through the Happy New Year stuff. But it is still January. I think according to the Chinese calendar, I don't think the New Year actually starts until February 15th or 16th. So, if you're still feeling it, be patient with yourself. Looking in the mirror is we joke about it and, we talk about it, but what we don't really talk about is how little it's not enjoyable. Like, self-reflection is it's not fun, and it's certainly not enjoyable. Especially when you can see how certain things have impacted your life, how they are impacting your life currently. And, change is hard. It's difficult. And, my last words are just, have some compassion for yourself. And I think the more compassion and empathy you can have for yourself, the more you're going to have that for others, especially considering the state of
the world
right now. And, I'll leave it at that.
GB.
Shout out to my dad. There's a lot of history and stuff in terms of stuff. We're going in for a checkup tomorrow. So hopefully everything goes well. And on a more important note, shout out to all the dads out there who just love you and make sure you love them back.
Yeah, man. Being a dad, that rings so true. I've been trying to be more involved in our community, and one thing that I've been trying to do is just organize just different events and stuff. And I tried to do a hide and seek tournament, but good players are hard to find. And that's it. We'll see you next Wednesday right here on the Community Rip Live on Stocktwits. We love you. We'll see you at 1 p.m. and our Tuesday